Welcome to the April 2026 update to the CPF Property Debt Fund and also the CPF Real Estate Credit Fund. My name is Joe Christie. I'm an Executive Director at Capital Property Funds. And joining me today is Noah Morabito and Xander Ryan, who are our loan portfolio managers for both the Property Debt Fund and the Real Estate Credit Fund.
Thank you, Joe. I'll start with the debt fund's loans in focus. So starting with Taringa, this will be our newest loan. We've got a Class A first mortgage paying 10.25% and a Class B first mortgage paying 17%. For those existing investors, Class B is the exact same as a second mortgage that we've previously had, and Class A is the exact same as the first mortgage that we've had. Noah, can you tell us a little bit about Taringa?
Thank you, Xander. Yeah, so this project is for construction of 6 luxury townhouses in the suburb of Taringa, which is about 15 minutes from the Brisbane CBD. So it's quite close. It's quite an affluent suburb. And the end sale would be to a more owner-occupied market. So we're looking at a real luxury product here. So we're thinking about pricing around $2.5 million each. And then so we're got to make sure that the build quality is up to standard. So we've got our own in-house CPF development management team who will be going up on site and checking the build quality. And then that'll be a 10-month program and with a 2-month construction or selling period after that in March.
Thank you for that. So, and for those who are looking to participate, there will be further construction draws after settlement, so you can come in along the journey there. Moving on to Walloon. So we've got a first mortgage paying 10.5%. Noah, you were on site last month. Can you give us a bit of an update of what's happened there?
Yeah, so the works have been progressing well. As you can be noted there, 14 of the 15 lands have got contracts. So services are all done to those lots. Funnily enough, the only one that hasn't sold is lot 1. That's got the windmill there, but that'll be progressing well. Repayments expected in late May. So they're all on target there, and final works to be done on just the back 3 sites or lots. So yeah, we're really pleased with the borrower, and then looking forward to the future. This will be moving into a stage 2, so keep an eye out for a new loan there.
And just to add to, Noah, I'm guessing with 14 of the 15 land lots sold, we've probably got more than 100% debt coverage through pre-sales.
And those prices are all at above the valuation and prices that support that valuation, and there likely will be even an uplift on that.
Okay,
that's a great update. Moving on to Paddington, so we've got a first mortgage paying 10% and a second mortgage paying 16%. Joe, can you give us a bit of an update on Paddington?
Yeah, thank you, Xander. So look, this one is quite a large project and around about $30 million, and the next stage is just sort of outside the realm of our ability to fund. So they are getting refinance and with an external financier, and pleasingly, the counterparty, being the new financier, has asked the lawyers that represent CPF for a PEXA settlement date or invited them to a PEXA settlement date on the 10th of April, which should basically in the next week or so. So that should be refinanced in full on around the 10th of April. So we've paid our quarterly distribution for that particular loan, or will be paid in the next day or so. So look, sad to see it go, because they've been a great bunch of people, and the underlying asset is an excellent quality asset in Paddington, but it will be going on to bigger and better things shortly.
Thank you for that update, Joe. I'll just go on to a bit of a rapid fire on the debt book. So Spring Creek Stage 6, we're expecting a repayment middle to late May. So we'll be sending a communication to unit holders shortly. Spring Creek East 2025, we're still waiting on that valuation report, and we expect it to be coming in the month of April. So unit holders will have the chance to either extend for another 12 months or get their money back. Markula, that's been actually sold by Terry McKinnon. So the settlement is a 30-day period. So that'll be towards middle of May for the repayment of that one. We've got Bowral. At last communication, we communicated that they had received their DA. The DA had been approved, and now they're just waiting on their operational works, a new valuation, and the QS report. So once we have all that information, we'll be rolling that into a construction facility, and unit holders will have the chance to either roll into the construction or receive repayment of the loan. Narangba, that's still, we were expecting the DA this month at the end of March, but it's extended a little bit into May. So that'll be probably just a bit of an extension on Narangba, and we'll provide another update to investors closer to the time. Musgrave, all unit holders did roll over their extension for 3 months. So on the 1st of April, they received a new holding statement with the Musgrave 2026 and that extension to July. Tingalpa in March was fully repaid. So that was a great achievement from the CPF team and the borrower. And we look forward to a new Marks Drillage deal that should be coming in approximately 2 months. So something to look out for. And then just a quick little update on the Junction. They did receive a new valuation report, and there was an uplift of $3.4 million. So we're very pleased about that uplift, and it just shows that kind of that market of first home buyers in the area of the Junction is going very well, and that kind of bodes well for the Junction, the Foundry, and that kind of first home buyer stock. Joe or Noah, anything to add on any updates?
Look, I think you've covered it quite well. I mean, sorry to jump in there, Noah. I mean, Tingalpa fully repaid. Mark has gone hard, as in he's committed on another asset at Roachdale in Brisbane. We're very excited about that. And you mentioned that has a 2-month settlement period. So that'll be something that we can talk to investors about. And we might even invite Mark to some of our seminars and do a little bit of a teaser update on that. Noah, anything from you?
No, just with Bowral and Narangba, we're just seeing with some of those loans that the DA comes in a little bit later than we expected. Moving forward, we'll look to provision for that a bit more, but we're pretty comfortable with these loans and look out for those rollovers into construction portions over the next 4 to 6 weeks.
Thank you both. And then just moving into the Real Estate Credit Fund. So the Real Estate Credit Fund, that targets a return of 9%, and it has paid 9% since inception. And the fund has been performing extremely well in the most recent quarter, so from January 1st to March 31st. And investors will be getting a bonus distribution. And that bonus distribution, as well as that 9%, will equate to a 10% per annum annualized return. So we're very pleased to be providing that bonus distribution. And if performance continues, which we expect it will, hopefully we'll continue to pay some bonus distributions to investors there. Investors will also be receiving kind of a fact sheet of how the fund performed, what the weighted LVR is. And if anyone is curious, they can contact us and get that fund sheet. Just a quick highlight on the credit fund. The distributions are paid quarterly, same as the debt fund. It's got the 2 redemption windows, the 15th of March and the 15th of September. It's really a set and forget fund. You put your money in instead of the loans repaying, for example, like Tingalpa, it just automatically rolls to the next one, and you don't have to worry about expiries or doing any extra paperwork. And you're always fully invested, so you don't have to have cash units and move from cash units to other positions. Joe or Noah, anything to add on that?
I'll jump in. I would just echo some of your comments, Xander. Is we are seeing a lot of investors now starting to come to us about building a position in the fund. It's always open. You can reinvest your distributions and build a position, and it is set and forget. I think we passed the $10 million mark. It's performing really, really well. And, I think the bonus payment this quarter, annualizing out at 10%, is a really good outcome. So if you haven't seen the Real Estate Credit Fund or you'd like to know more about it, please make contact with the team. Anything to add, Noah?
I think importantly as well is that the fund is diversified across a number of our loans in the portfolio. So you're getting a reduced risk across that as opposed to putting all your money into 1 or 2 of these projects. So that's another benefit of the Real Estate Credit Fund and something that, we're looking to push.
Just to add on to that, no, it had 27 loans in it at the end of March 31st. So yeah, you do have that diversification there. Well, thank you everyone for listening to the April 2026 investment update on the debt fund and the credit fund. And if you have any further questions, feel free to reach any member of the team, and our contact information will pop up on the screen now. Thank you, Noah and Joe.
Thank you, Xander. Take care.
Thank you.
Take care.